Markets this morning are higher. Futures indicating a gain at the start of trading this morning. Take a look. Investors are gearing up for the busiest week for first quarter earnings yet. This will be the single busiest week. Companies reporting this morning include UPS, PepsiCo, Pfizer, Merck, Caterpillar, 3M, Southwest, and D.R. Horton. Joining me now is Verdant's CEO, Leo Kelly, to talk more about that. Also joining the conversation this morning, Fox Business's Dagen McDowell, the Wall Street Journal senior writer, John Hilsenrath, and senior fellow at the National Taxpayers Union and Forward Strategies president, Maddie Duppler, is here this morning. Great to see everybody today. Thanks so much for being here.
Great to see you.
Great to be here.
Good morning.
Good morning.
We've got Leo Kelly here today talking about markets. And Leo, let's kick this off with where we are. We've got another gain, even though oil pointing to another sell-off this morning amid a host of earnings and little by little openings across the country. How would you allocate capital this morning?
Well, I think you have to allocate capital carefully and deliberately at this point. Stocks are still down about 15% from their high. But this is a big rally, and we've been taking small bites for some time now. And this is the classic Warren Buffett, you get rich in bear markets. You just don't know it at the time. I think the market, people forget it is a forecasting tool, not a weighing machine. And so I think the market is trying to discern between massive economic disastrous numbers that are in front of it and the fact that we are starting to reopen. And I think what investors miss sometimes is human ingenuity. We have a really persistent habit of finding ways to handle shock events like this. And I think the market's putting that in the numbers.
So are you saying that despite some negative headlines, you still want to own stocks?
I think you absolutely want to own stocks. Again, if you are a long-term investor, especially today, bond prices with yields essentially crushed and the Treasury at basically zero are as expensive as they have ever been. The PE on a Treasury is astronomical. You absolutely need to own stocks to fight what is going to be inflation in the future. Not in the next 6 months, maybe not in the next year or so, but down the road. I think what people miss sometimes, we're all long-term investors until the market goes down. Then suddenly everybody becomes a day-by-day trader. If you're a stock buyer, you have to have a long-term point of view. And by the way, that takes this whole V-shape and U-shape thing and turns it on its head. The longer you look, the more it looks like a V.
Dagen McDowell.
If you look at how the NASDAQ Composite has performed this year, the NASDAQ is down less than 3%. That's like a slight earnings miss from Apple, maybe. What does that tell you? Is there risk in tech, given the fact that it looks like clear sailing ahead for these tech investors?
Well, I think what that's telling you, Dagen, is that we are looking at a market that reminds me of 1999, 2000, where you have a handful of tech names that are driving the index. The weighting of the largest tech stocks are enormous in the index itself. And so you're seeing this small group of names that are doing quite well in the current environment, really driving that return higher. And as is the case in any market, investors have to look very closely at valuation. I think if you look at some of these biggest tech names that have the lower risk, like any other asset, when you buy the low risk name, you're going to over time get the lower return. And I think at this price level, an investor has to ask themselves the question: are you a long-term investor? Are there turnaround plays here? Because if you pick correctly active management, you can make a higher rate of return.
So in that theme, is there value to be had right now in the energy sector? I mean, look at oil prices under pressure, sharply lower, just in the last couple of weeks over this new concern over storage capacity, Leo. Would you look to buy commodities, or would you look at the oil companies? Are you concerned about dividends being suspended? ExxonMobil and Chevron obviously reporting earnings. What's your take here?
Yeah, I think all dividends are in danger right now if you're in one of these industries that have come under pressure. And energy specifically, if there was ever a signal that the market is a forecasting tool, it was this past week, where oil prices went negative and energy stocks are actually moving higher. That's the market looking forward to $30 barrel of oil in the future. My challenge with energy is there is so much supply, not just as a result of the crushing demand, but there has been a lot of supply. We basically dropped another Saudi Arabia into the world supply when we started fracking. It's not as it was decades ago where oil would run and make these huge price movements. You saw that here. We had a perfect environment for higher oil prices, and we didn't get back to where we have been historically. So I think you have to be careful with energy. I think you have to be careful with debt levels, and I think you have to expect dividends to come down. There are places where you can buy dividends, and energy's a risk.
All right, we will leave it there. Leo, great to see you this morning. Thanks so much.
Thank you. Appreciate being here.